What are the changes one is expecting in the budget on the indirect tax side, particularly from the perspective of customs and the foreign trade element? As we are aware, the PLI scheme has been a success, and the 13 sectors on which it was launched and the amounts that have been extended by the government in terms of incentives are significantly large. With such a success of the PLI scheme, and in a way it has been able to give an impetus to the manufacturing in India, the question here is the industry is wondering whether PLI scheme will become now the vehicle for extending and making India a manufacturing hub, not only just for domestic consumption, but even for exports. So the industry is looking at an announcement of further PLI schemes in various sectors like leather, like lemonades. On the custom side, last year the government announced that they will be reviewing 400 odd exemptions on the exemptions. Clearly, industry is wanting that these exemptions should be scrutinized well, and those which are not adversely in fact affecting the industry should be the ones which should be withdrawn. This requires a much more detailed scrutiny on the part of the revenue authorities, and one expects that some of these exemptions will be done away with in the budget. Again, related party valuation is one area where some relief is being sought by the industry, as clearly it still takes some time for customs authorities to do final assessments in related party transactions. The other area where one is looking at some changes is in the SEZ policy. There has been some ambiguity in terms of how much can be cleared for domestic consumption by SEZ unit. It's important that this is clarified unequivocally, that so long as a unit meets its NFE requirements, it is free to clear as much as it likes in the domestic tariff area. Another area is the road tax scheme. In the road tax scheme, one is expecting that it will be extended further to include exports made by SEZs, those made under advanced authorization scheme, and also those made under the inbound manufacturing scheme. The lucrativeness of the inbound manufacturing scheme does get a little truncated in case the road tax scheme is not extended to manufacturing done under the inbound scheme. Similarly, one is expecting some more changes in the FTA or the free trade agreements. We know that a free trade agreement in UK is expected similarly very soon, and similarly in US, EU, Israel. These are some of those FTAs which are expected in the near future. Industry is clearly looking at ensuring that the government looks into what is being included in the FTAs so that it does not impact domestic manufacture. These are some of the changes that the industry is expecting on customs side. On the tariff side, considering that electronics and EV vehicles is really in vogue and is currently the one where a lot of investments is being made, one is expecting there will be some tariff rationalization on electronic and electronic components just to give a fillip to domestic industry.